Hello, I'm Patrick Manzi, Chief Economist with the National Automobile Dealers Association, here to give you a fourth quarter of 2021 look back and a 2022 outlook. Now let's start with a discussion of the labor market. In December, the U.S. economy added 199,000 jobs, and there were positive revisions to October and November's numbers, bringing the fourth quarter average monthly jobs gains total to around 365,000 jobs. While still positive, this is down from the third quarter's average of around 651,000 jobs. Also positive news in the employment report, the unemployment rate fell to a pandemic low of 3.9%. Elsewhere, employment at franchise dealerships at the end of November totaled 1.08 million, and that number has been more or less stable for several months now. Jobs at franchise dealerships have been consistently about 4 to 5% below their pre-COVID level, and we expect that they'll be remaining at that level until some of the semiconductor microchip production issues are dealt with and sales rates on new vehicles begin to pick up once again. So now let's discuss another report from the Bureau of Labor Statistics, one that covers hires, job openings, and quits. At the end of November, a record 4.5 million Americans left their jobs, but on the bright side, a record 6.7 million were hired. And the good news here is that hires seem to be outpacing quits. But many workers are confident in leaving their jobs. When they go out there, they're going to find a better one for higher pay. And in fact, it's the best job seekers market ever. There are currently a series high 10.6 million job openings across the country, and that translates into 1.5 job openings per unemployed person throughout the economy. In other news, real personal consumption expenditures hit a post-pandemic high and surpassed their pre-pandemic levels during the second quarter of 2021, and they've accelerated ever since. Consumers are out there in the economy spending money, and couple that with the supply chain disruptions we've seen throughout many sectors of the economy, you've got a perfect storm for inflation. And in fact, in November, the highest rate of inflation since 1982. Prices are increasing for goods and services throughout the economy, but some notable ones include fuel, housing, and vehicles, just to name a few. Now, all of those prices are very visible to consumers. So those rising price statistics have started to show up in the consumer confidence data, which hit a post-pandemic low at the end of November. Consumers are very worried about these price increases. As a whole, we still expect real GDP growth to increase in 2021 by about 5%, and then in 2022 we're expecting real GDP growth of between 4 and 5%. So still very solid, at least by historical standards. Now let's move to a brief discussion of the light vehicle market in 2021. New light vehicle sales totaled 14.93 million units in 2021. Now this is up 3.1% compared to 2020. While still positive, this was below expectations seen earlier in the year before we knew the full extent of the semiconductor microchip shortage. Now, the semiconductor microchip shortage is likely going to impact sales throughout at least the first half of 2022, with dealers continuing to sell most inventory soon after it reaches their lots. The sales rate in December came in lackluster as well at a SAAR of 12.4 million units, down from an over 16 million unit SAAR in December of 2020. In the fourth quarter, the SAAR averaged 12.8 million units, and this is down from Q3's total in the mid-13 million unit range, and down from fourth quarter of 2020 when the average SAAR topped 16 million units. Now, a brief deeper dive into some of the sales data we saw in 2021. As has been the case for several years now, consumers continued to shift more and more of their new vehicle purchases to the light truck segment, and light trucks accounted for 77.6% of all new vehicles sold. We expect that this trend is only going to continue and that we continue to march towards an 80% market share for light trucks. In 2021, alternative fuel powertrains also gained market share. Hybrid vehicles market share increased to 5.4% of all new vehicle sales, and this is up from 3.1% in 2020. Plug-in hybrids also gained market share, reaching 1.2% of all new vehicle sales, up from half a percentage point in 2020. Battery electric vehicles increased their market share as well to 2.9%, and this is up from 1.6% in 2020. Franchise dealers sold about a third of those battery electric vehicles in 2020, and we expect that their market share within the battery electric vehicle space is only going to continue to grow as more and more battery electric vehicle models are introduced throughout 2022 and 2023. As a result of the microchip shortage, strong demand from consumers, and reduced discounting from OEMs, average vehicle transaction prices are expected to top $45,000 in December, according to J.D. Power. This is the first time average transaction prices have been above $45,000, and this translates into an average monthly finance payment of $680 for the month of December. Now, payments have risen throughout the year and are up about $78 compared to December of 2020. Consumers have gotten somewhat of a break on increasing new vehicle prices from the low interest rate environment, which in December was just over 4% on an average new vehicle finance contract. Now, because of such strong demand for new vehicles, we've also seen the prices of used vehicles rise as well. And this has helped consumers' vehicle affordability with when they go to buy a new vehicle, because their trade-ins are suddenly worth a lot more. According to J.D. Power, the average trade-in value a consumer saw in December was up 83% compared to December of 2020. Now, the price that dealers pay for their inventory is also up as well. According to the J.D. Power Used Vehicle Price Index, at the end of November, prices were for used vehicles at wholesale auctions were up 61% compared to the start of the year. We expect that those used vehicle prices are going to continue to increase throughout probably the first quarter and second quarter of the year before we begin to see a return of normal depreciation and a slight cooling of those used vehicle prices. Now let's discuss new vehicle inventory, which has been a major story throughout all of 2021. At the end of December, new light vehicles on dealer lots and in transit totaled 1.12 million units. This is up about 7% or so compared to November, but still, new light vehicle inventories are down 59.1% compared to the start of the year. We do expect that these inventory issues are going to continue throughout 2022, and sales will likely be limited by the available inventory that dealers can source. Dealers are likely going to continue selling these vehicles soon after they reach their lots, as we saw in the second half of 2021. Now, we do expect that in 2022, new light vehicle sales will increase. Our forecast for 2022 is for light vehicle sales to total 15.4 million vehicles. Now, this is still positive as sales are increasing. However, sales would likely be much higher were it not for the semiconductor microchip shortage. And we don't expect that sales will really begin to pick up to their pre-pandemic levels until at least the end of 2022 and maybe early 2023. Thanks for tuning in to this economic update. I hope wherever you are that you and yours are well, and I wish you a happy new year. And I hope to see all of you at the NADA show in March of 2022 in Las Vegas.